Hi there traders, this is Steve Miley, the market chartist for FX Explained, and another of our weekly macro watch updates for the week commencing the 19th of October 2020. European lockdowns see risk assets wobble. So first of all, we're going to take a look at the macroeconomic and geopolitical developments over the past week. Well, COVID-19 cases continuing to surge throughout Europe and the UK, within the EU region and beyond. And all of this is putting a more pressure on governments in here to move to more aggressive lockdown measures. And we've certainly seen more stringent European lockdown measures throughout the continent. In the UK, but we've seen regional lockdowns, national lockdowns in some instances as well, and governments and throughout Europe looking to move towards even more stringent lockdowns, potential for more stringent measures as we go into the balance of October and November into the winter. And that's put definite negative pressures on stock indices in here. EU-UK trade talks have collapsed, with fishing rights still a major sticking point in here, particularly between the UK and France and also with Spain. Again, this is putting negative pressures on risk assets, particularly in Europe. So the European stock indices certainly looking more damaged in here compared to their US counterparts over the past week as we've moved through the middle of October. In addition, elsewhere, we've had an ongoing impasse between the US economic relief package between the Democrats and the Republicans. Mnuchin and Pelosi unable to reach agreement in here, and now fading hopes of a new US economic relief package before the US presidential election. And that leaves markets as well shifting back slightly towards more of a risk off theme, with the hopes of this package in here pretty much driving riskier assets higher throughout the late September through early October rebound that we've seen. Moving on, Biden continues to stretch out his lead in the polls. This is easing the threat of a difficult power transition. So this is definitely seen as a more positive for the market. Less chance of a difficult power transition if there is a strong Biden victory. And also growing risk in here as we move forward of a clean sweep. The White House and both houses of Congress potentially going to the Democrats in here. And again, in the short term, certainly that's seen as more of a positive for the markets, allowing for potentially a more significant economic relief package, COVID-19 relief package from the Democrats if they do have a clean sweep from the presidency and both houses of Congress. And finally in here, over the weekend, the Labour Party in New Zealand won a strong majority in here and is possibly then giving some short-term positives for the New Zealand dollar as we go through into the beginning of this week. So let's take a look at the global financial market developments for the last week ending 16th of October. Well, here we see that vulnerability in the European equity indices. The DAX dipping lower. We did get a rebound Friday, but looking more vulnerable in here now as it did previously back in September. The Dow Jones in here certainly more positive. The US stock indices more positive than their European counterparts, given that this new epicenter of a second wave is currently in Europe. However, the rebound that we've seen in here from late September through early October for the US equity indices has certainly started to wobble in here at the end of last week or through last week, despite the slight rebound that we did have. The US dollar index has started to bounce. The US dollar is certainly seen as a safe haven, and so a slightly stronger US dollar in here, having been weak through September, late September, early October, with the more risk on theme. A shift certainly to more risk off from in the forex markets has seen a US dollar bounce in here, US dollar rebound, with the US dollar seen as a safe haven, as a flight to quality currency. And on the back of that, the Australian dollar weaker. So the risk on theme has faded. We've gone more into risk off. And one of the major risk currencies is the Australian dollar, seen as a currency you would buy in a risk on scenario. So the Australian dollar weakening, looking more vulnerable in here over the past week. The pound has been more erratic with everything that's gone on between the EU and the UK and the collapse of these talks. Certainly a slightly more negative spin throughout the week, over the past week, having had that strength through September, October, but more of an erratic tone with still a lot of indecision and confusion about the path of the talks between the EU and the UK going into both the balance of October and then the balance of this year. Oil has, the rebound that we saw in oil from the beginning of October has stalled and become more cautious, although the oil price remains resilient and is still, if anything, pointing slightly higher. And similarly for copper in here, a more cautious tone, sideways really over the past week, but still hovering just below those September peaks in here, that September peak, which was a multi-month peak. And gold is more indecisive though, certainly a more sideways theme for gold in here over the past week. Some slight weakness earlier on in the week, a slight rebound towards the end of the week, and a more indecisive theme for gold since we had that mid to late September breakdown. Let's move on and take a look at the week ahead, the week commencing the 19th of October 2020. Well, the central banks in here, we have Fed Powell in here speaks on Monday, and then we get Reserve Bank of Australia minutes, and the PBOC interest rate decision comes through on Tuesday. On the macroeconomic data side, the standout is going to be the market PMI, flash PMI data that we get at the end of this week on Friday. And earnings seasons continue. IBM, Procter & Gamble, Netflix, Tesla, Verizon, Intel, Coca-Cola, and then at the end, towards the end of the week, Amazon and Microsoft are all reporting this week, and all are going to be watched. Although we've had a decent positive earnings season so far last week, but the market's actually dipping lower, not really responding to those earnings. So to sum up then, we get on the macroeconomic side, Chinese GDP, industrial production and retail sales to kick off the week on Monday, with Fed Chair Powell speaking also. Those RBA meeting minutes and the PBOC interest rate decision come through early Tuesday. Australian retail sales and UK inflation data alongside CPI data from Canada Wednesday. The weekly jobless claims numbers from the US on Thursday, and we finish off the week with New Zealand inflation data and that probably most important market global flash PMI. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.